Hey guys, this is Shinju. Welcome to day 3 of DeFi discussions. We'll be kicking things off with an awesome talk by Felix Feng, CEO and co-founder of Set Protocol. And he'll be doing a deep dive into strategies employed by Set social traders. Felix, can you take it from here?
Sounds good. Hey everybody, can you guys hear me? And if you can hear me, just say something in the chat box. Okay, perfect. All right, awesome. So what I'm going to do today is do an overview of Set. I'm going to talk about some asset management strategies that are utilized today, and we're going to do a walkthrough over token sets. Walk through some of the strategies that we have available. And just to be clear, nothing that we are kind of displaying and presenting today is meant to be construed as investment advice. Investing in crypto assets and sets is risky, and this is not me telling you what you guys should be doing. So let's get started. So I'm going to start with a really high introduction, high-level intro of Set. So essentially, the problem that we're solving is that we're helping kind of the $120 billion in crypto held by retail implement asset management strategies. So these are things that they do not do today. And when there's extreme amounts of volatility, for example, over 40% overnight swings, these are really kind of negatively affecting crypto investors, as they've resulted in billions of losses and missed opportunities. And the problem with existing solutions is that, one, they're inaccessible. Most retail users don't have access to crypto hedge funds, and doing it yourself is extremely difficult. It requires technical knowledge, time, and effort, and this is extremely hard to do when crypto itself has a 24/7 nature. And many of these solutions are geographically limited. The centralized solutions are insecure in nature, and they're becoming increasingly difficult to access as they require more stringent KYC AML requirements. And really what Set is an asset management protocol. What we built is a set of smart contracts built on Ethereum, and it helps users implement trading strategies. And each single strategy is represented as an ERC20 token. It can be issued and redeemed similar to an ETF. Each set is fully collateralized, which means that everything that Set represents is held in a smart contract called the vault in kind of a one-to-one manner. So for example, if you had a set that was made of 50% Bitcoin and 50% Ether, that wrapped Bitcoin and Ether is held in this vault smart contract. And these sets can be rebalanced. Their weights can be adjusted periodically, either through discretionary strategies or manners, or in a way in which kind of all the strategies are programmed into a smart contract. And this is a protocol that inherits all the benefits of DeFi and crypto, in that it's accessible. It's 24/7. There's no minimums. It's available to everybody in the world. It's trustless in the sense that everything is kind of administered via smart contracts that are audited and public. And it's interoperable in the sense that this is something that anyone can build on top of. And the idea with Set is that this is a protocol that's intended to be used by wealth managers, financial institutions, exchanges, and developers to build products that end up serving their end users, which are the investors and the traders. And 1 year ago, we launched on mainnet in around April of 2019. And 1 year ago, we were the only venue that was where you can get a set, and that was token sets, which is a product that we'll walk through in the future. We were the first trader on our platform. What that means is that we were the first one to create strategies on Set. We had launched some. We'll describe some of the strategies we built in a little bit. And we were the first liquidity providers, which means that whenever a rebalance happened, we were the ones that were providing working capital to help service these rebalances at adequate slippages. And I like to say that we were our first users. Like, we were the first ones that bought our own sets. And fast forward 1 year later, not only Sets is today the most popular venue in which you would get a set, but there's multiple wallet integrations. For example, Total or Multis, and that have integrated set today, and we have a whole bunch of other wallet integrations that are underway that we're pretty excited about. In addition, we launched social trading, so no longer are we the only trader on the platform, but there are 24 other traders that are implementing strategies on set. In addition, there are 12 different liquidity providers that participate in these auctions. Some of them do it manually through our user interface. Some of them have integrated directly via smart contracts and have built automated systems to kind of take down these auctions. And as a result, the slippages and the spreads for these rebalances are improving for users over time. And now today there are over 4,500 unique addresses that actually own sets, and it's really cool to see that some of the Genesis block addresses also are owners of sets too. So the goal of SET is to be the de facto asset management protocol, and what we imagine is building an ecosystem where there are millions of users who own sets and investing in different strategies. There are tens of thousands of traders or fund managers that are implementing sets and kind of sharing their knowledge and insights and trades with their users. We imagine that there's thousands of liquidity providers that are helping to provide liquidity for all the rebalances that are happening. And we're imagining in the future there'll be hundreds and thousands of venues in which you can get a set. And what we're doing is just working towards this vision, and we're imagining that, no, this isn't something that is just kind of confined to crypto, but no, we hope that this is infrastructure that is utilized by people all over the world for all different types of assets. So that's a quick overview of SET. And I want to dig in a little bit into the strategies that are employed by SET and how we got to where we are today. So really where SET began was we began with index strategies. So back in 2017, we wrote a white paper defining a specification for a basket of tokens, and that made a lot of sense. In 2017, when there was a proliferation of tokens, there were thousands of different ICOs that were happening, and the best strategy really was to diversify across a number of different assets, because you didn't know which token was going to 100x in value. You didn't know what the next Denta coin was going to be. So what we originally built was were these sets that would diversify across, let's say, the top 10 ERC20 tokens. And there were a number of other companies that built these in more centralized manners there seemed to be strong product market fit. So an example of one of these index strategies is, like, let's say a buy and hold, where let's say you want to maintain a 50% balance between Bitcoin and Ether, and you want to rebalance monthly. That is an example of a product that we launched earlier this year, and something that we thought would be quite interesting. But what we realized is that these strategies, over the course of 2019 and 2020, most of the long tail of tokens became less interesting, and it consolidated back into large cap coins. So people wanted to trade Bitcoin, Ether, and stable coins, and these types of index strategies were actually underperforming the market. So we did a bit of thinking, and where we ended up was that what we should implement are quantitative strategies. So these are strategies that are typically used by quantitative hedge funds, and they typically utilize some sort of technical indicator and devise a strategy to make trades against. For example, you can use an indicator such as the moving average, which is the average price in the past n days. And whenever there is a crossover between the current price and that indicator, you would make a trade. And that's what we found to be quite a lot more interesting, what has gotten us a lot more traction to date. And just to dig into that a little bit more, so our first trend trading strategy we launched in July of 2019. This was the first time that users had such easy access to technical analysis strategies, when typically this is something that you would typically employ a hedge fund to do, or you would kind of build some robots or programs to automate this behavior yourself. And it allows users to accumulate Ether, and when back tested, these are strategies that have historically done quite well. So just to walk you through an example, on the right here you see a diagram of one example of a set we have, which is the ETH20 simple moving average crossover set. So essentially what you're seeing here is that you can see the price of Ether, which is the dotted line, and you can see that when the price of Ether crosses over the moving average, then it rebalances into Ether. So in our strategy, you're going from 100% USDC and rebalancing into 100% Ether, and this is taking advantage of kind of this is momentum trading, and when the price and it anticipates kind of going into the more risky asset when things are going up, and then at some point you can see on the right when the prices crash and the price goes below the moving average, it rebalances back into USDC. And the general idea is that it helps you take advantage of the upsides and it protects you against the downside. And to provide an example, back about a month ago on Black Thursday, when Ether dropped from about $200 to $130, our sets had already rebalanced into USDC around $200 to $230, depending on the set. So it was able to avoid that huge drop in price because it had been following the strategy. And this is something that I frankly had fell into. So I want to tell you a quick story about how I learned to love the quantitative strategies. Well, coming from the traditional financial world, I was very skeptical about quantitative strategies. At least, especially in the U.S. market, you would typically perform fundamental analysis and try to understand which types of stocks and securities would be attractive, and momentum strategies were thought to be black magic, and you wouldn't really implement them, and they didn't seem to be very effective outside of the top hedge funds such as Renaissance Capital, Renaissance Technologies, which would implement them quite well. So but it turns out things are quite different in crypto. It turns out in crypto that these strategies work quite well. Well, why would that be the case? So, crypto, one, is extremely volatile. You have frequent bull and bear markets, and it has no clear valuation model. So people don't know, in general, what the valuation of Bitcoin or Ether should be. There's no way to value it. And as a result, it turns out that most of these types of products that trade based on where they don't have fundamentals trade on news. So as a result, historically, you've seen prices of Bitcoin increase significantly when you see good news or bad news associated with it. And that really is the case with many foreign stocks and foreign currencies as well. For example, in China and Korea, most people actually trade using momentum strategies and using technical indicators, because the Chinese government can decide to prop up whichever company they want and take another one down. So you can't really rely on fundamental kind of indicators to really decide how to make a trade. So I was pretty skeptical at first with this type of stuff, but as I kind of learned more about these strategies and I saw the back test, I realized it had been doing a lot of things that I would have done myself. So I mean, the main prescription for asset management strategies, historically has really been to hodl, right? Which is you would buy some Bitcoin or Ether, and then you would hold on forever, regardless if the price goes up, regardless if the price goes down. But it turns out that is a pretty suboptimal strategy. It would have been, if you kind of reflect back a bit, it would have been nice to have sold, in the early 2018. And it would have been nice to buy back, in Bitcoin when it was about 4,000 or 5,000 or so. But those are things that you didn't do. And it turns out a lot of these indicators and strategies, when implemented, would have made those exact decisions for you. And as a result, it would have helped multiply your Ether. So when I kind of saw this, I saw the back test, I thought, wow, this is what I would have done, and this would have automated for me. So that was when I started to learn to love these quantitative strategies. So if you take a step back and zoom out, asset management is a pretty broad kind of term. And really, if we look at crypto and the DeFi asset management space, there's a lot of different categories of strategies that you can employ. We just talked about quantitative, but there are other strategies like market making, which is where you're generating fees from providing liquidity. These are typically employed by projects such as Uniswap or Balancer, where you can provide liquidity and you take impermanent loss risk, but you hope to be able to generate returns based on providing liquidity. Another strategy that we talked about before was a long only or index type of strategies. These are employed by Bitwises and Grayscales, and they haven't been as popular, at least on the DeFi side of things, for the reasons we mentioned before. Some other strategies are arbitrage strategies. You might want to take advantage of different types of stablecoin arbitrage opportunities. You might want to take advantage of liquidation events. Some kind of private hedge funds and market makers participate in these type of strategies. And there are a number of different strategies too, but really where most of set strategies live today are quantitative ones, as we found those to be quite difficult to implement for retail, and they have been quite profitable given crypto's volatility. So, I mean, the thing is that you are taking principal risk when implementing these strategies, but they have been doing quite well. And this is something that a lot of people have started subscribing to, and as a result, we've seen kind of Set's popularity grow significantly, especially in the past month. So that's kind of a quick overview of kind of Set and some of the strategies that we implemented. So now we're going to kind of do a dive into some of these strategies that we have and walk through token sets, and to help you understand much better kind of what I mean by these are quantitative strategies that we're implementing and how they work. So if you haven't been to token sets before, this is the predominant venue in which most people get access to sets. So as you can see, this is kind of we're going to go into the Explore page, and we have a few tabs here. Like we have the robo sets, which are the proprietary strategies that we've created ourselves. These are strategies that are where the rules are defined completely using smart contracts. So every single set itself is a token, and all the logic for how for the indicators as well as the strategy are encoded in smart contracts, and you can actually go to that code yourself. And then we have the social trading sets, which are also sets, but they're managed by third parties. These third parties have the discretion to decide what to rebalance into and when to rebalance as well. So as you kind of see this page, it seems like a lot of information, but it's all for good reason. So here you can kind of see this is the ETH RSI 60/40 yield set. That sounds like a lot of technical stuff and maybe difficult to filter and decide what you want, but you can see that this is a momentum trading strategy. There's about $4 million in the set, and you can kind of filter and you can kind of search and sort by the different types of parameters. Like you can see which sets have done the best or the worst by inception. You can see it by different time frames as well. And you can also see the performance against Ether, not just USD. So you can see if the goal is to accumulate Ether, you can see how these sets have performed over time. So I'm going to just look at the ETH RSI yield set, as that's been the popular set so far, most popular set so far. Right now, it's positioned in 100% Ether. And I think that most people so you can see some really high level information about the set. You can see a really nice kind of description about the set. If you're interested in kind of the indicator that it uses, you can kind of click into one of these links that lead you to a help article. In this, the RSI is a relative strength index, and it's an oscillator. So which means that it's an indicator that where the value kind of oscillates between 0 and 100. And this has been a very popular and widely used indicator when trading. And I think something that most people don't know is that when you kind of click this link to more details, it gives you a lot more information about the strategy, how it works, and some of the reasons that you might want to employ something like this. So in this particular set, this is a set that oscillates between Ether and a compound USD. So when it's sitting in USD, it's actually earning interest for you. And this is a set where it's oscillating, where if it's implementing momentum strategy. So if it goes above, if the RSI is an indicator that goes above 60, then it begins to it purchases or rebalances into Ether. And if it goes below, then it would rebalance into USDC. And there's a lot of really great information here. And I think the one pretty pertinent one is looking at the back test of these strategies. So if you were to run these strategies or the exact same strategy from a time in the past into today, how would it have done? So you can see that this strategy itself, when if you applied it since 2016, would have if you compare it to Ether, it would have done significantly better. In this case, Ether, the price of the set was about let's say $1,300 or $1,400, and the price of Ether was a few $100s. So it's done significantly better. That's one way to kind of look at the potential returns. And you can see that there are certain periods of time when it rebalanced into the stable coin or kind of CUSDC, where where it looks very flat. And whenever it's moving in nature, it's in Ether. So you can also, there's another cool way to see this is how much Ether it's accumulated over time. These types of trend trading strategies typically help you accumulate more Ether, in the sense that if you start with 1 Ether, like you did in the beginning, like you would, in this case, you would end up with potentially 6 or 7 if you kind of stuck onto this strategy over time. So these are things that, so this is really great information for figuring to help you understand like how this works and how it's done, like it would have done historically, which is the back test. But what's really exciting is also seeing the front test as well. So once these strategies are live, like how would they have traded? So you can see that this is something that was deployed in December of last year, and this is a really cool chart because it shows you the price performance of the sets, but also shows you the rebalances and when they happen. So this is a set that started in CUSDC, so the price was kind of like, the price was pretty flat, and it rebalanced in January 5th as things were heating up again. So it took full advantage of kind of this movement. And then early March or late February, it rebalanced back into USDC, and it kind of stayed there for a while. And then it kind of it just avoided the entire kind of Black Thursday debacle here, and it started. And when Ether was back at 140, it rebalanced back, and has been taking advantage of this price movement since. So what's really cool is that when you started with about 0.7 wrapped Ether, back in January, today you would have 1.16 today. So that's about a 65 to 70% gain. And this is in the same period when Ether has been up, let's say 48%, this set has been up 150% against Ether. So this has been doing quite well, and it's why it's one of the most popular sets today. And you can see a lot of other additional information about the sets here. You can see its rebalance interval, which is the minimum amount of time between the last rebalance before it can rebalance again. You can see its inception date. You can click here to view the set on Etherscan and copy the address. Here you can see like when was the last time it rebalanced. So it's been more than a month since it's rebalanced. You can see that the RSI is 68, so things are quite bullish at the moment. And it was only when both of these indicators are met that it can initiate a rebalance. So I'm going to walk through. So this is the ETH RSI set. I'm going to quickly walk through one other set, but on the social trading side of things. We have a good number of sets today. We have about 40 sets that are available kind of on the social trading side today. So that's been continuing to grow over time. I'm going to just jump into this Aaron Kruger set. This is one that trades Link and USD. And this is something, this is a set that has like $300,000 in it. And I think the main kind of differences between these sets is really first, like there's been these kind of implemented fees. So there are 3 types of fees that are available on these sets. The first one is the buy fee. So whenever you purchase a set or you enter, you may pay a front end load fee. There is performance fee, which is typically benchmarked against some sort of asset, whether it's USD, Ether, or Bitcoin. And typically there's like a high watermark associated with it. So like if a fee has been paid and the price of the asset hasn't exceeded that watermark, there's no fee that is accumulated in the future. And there's a streaming fee, which is kind of like a subscription fee, where the longer that you're subscribed to the set, the more fees that you pay in that regard. So this is similar. This is a particularly active set. You can see that in the course of April, there have been many rebalances, as you can see from kind of the blue dots here. This is something that has been doing quite well in taking advantage of kind of the price volatility of Link and trading kind of against that. And this has been something that has helped kind of users accumulate more Link over time. And this has been doing better than Link and kind of wrapped ETH in the same period. So I think the really cool thing to highlight within this page is that there's just so much additional information about kind of these sets and stats. So you can kind of see how many set holders are. You can see that in this set, like Aaron Kruger has $18,000 of his own balance in this set. It shows that he has skin in the game. I think it's really cool to see the max drawdown, which is a value that denotes risk to some extent. You can, which is it defined as the percentage from the kind of the peak to trough, right? Like what's the maximum amount of volatility this has experienced. You can see a lot more information about kind of these fees that I kind of described. You can see what it's benchmark against. So it only generates performance fees when it's kind of beat this benchmark. And you can see what the high watermark is at the moment. So I think that, and I think the nice thing is you can also kind of see the feed about kind of these rebalances and, what are some of the rationale that kind of backs this up. So I just kind of want to stop there as I kind of walk through two of the sets that we have and kind of provide a high level introduction to kind of what set is and what we're doing. And I want to make sure there's a little bit of time for questions as well. Okay, so it looks like there's a lot of questions. Cool, yeah, I'm just reading through some of these kind of comments now and really appreciate everyone's kind words. So I'm just gonna start from the top with some of the questions that we have. So the first one is it possible to include pool tokens like Uniswap tokens? So the answer is yes. The idea is that with set, you can, anything that's an ERC20 could potentially be put into a set. And I think like right now, like we've kind of limited it to assets that are very liquid in nature and in which there's an oracle attached to it. So we've, most of the assets we have today are Bitcoin, Ether, USD, and we use MakerDAO's oracles for Bitcoin and Ether. And we actually added Link as an asset as well. And we've actually worked with the Chainlink team to launch a Link USD oracle. So I think that like pool tokens would be super awesome, particularly like if you have a set that is not 100% USD or 100% Ether, but something between, and you want to implement a market making strategy on top of it. Like that's something we'll certainly explore in the future. The next question is, have you found rebalancing through smart contracts allow for front running? Right now, like we haven't seen that much front running into our system. Like our sets aren't big enough to really affect the market. Like this front running is typically something that is that is an issue in the ETF world, particularly when, let's say that you have an ETF and it's trying to rebalance and add a new type of stock into its mix. So typically you would find that that particular stock that's being added has changed a lot in price prior to rebalance, particularly if the rebalance date is public. So our sets historically have not been moved that much volume to move the markets. So that hasn't really been an issue for us today, but in the future, if our sets are $100 million in size, then you can imagine that really smart market makers and smart traders might want to front run that. But we're actually building in many of the mechanisms that help kind of mitigate that. One of the big ones that we're doing is implementing TWAP, or more kind of sophisticated execution algorithms. So that will be something where you're not doing a market order all at once, but you're kind of splitting up your certain trades over time instead. I think what types of oracles are we using? So the underlying oracles, like I mentioned, are MakerDAO's kind of ETH USD and Bitcoin USD oracles. We just got voted in through governance to use their V2 oracles. And so what we would do is we would actually take a daily price of the oracles, and that's around like 7 p.m. UTC time. And then we would store these pieces of data on chain. And then we would actually calculate the moving average from that stored kind of daily price. So we had to build what we call our meta oracles to implement the moving averages. Okay, next question. With many DeFi projects in the news for getting hacked or critical issues, what additional measures have you taken to build further confidence with users? I mean, that's a really good question and something we get a lot recently. I mean, security has been kind of one of the most important things since day one. And we've been very aware of all the types of not only smart contract issues, but also economic issues as well. And I think the biggest kind of source of issues has really been around, recently has been around economic problems. So I think that in 2018 and 2019, many of the good DeFi projects have had at least like smart contract security under wraps. Like if you're launching a new protocol, people typically would apply 2 to 3 different smart contract auditors to look at their contracts, and that's really what we've done. And many of those who have done that have not had any smart contract issues, at least for the code that has been looked at very closely.
All right. This was great, but we actually have to transition to our next session now. Thanks so much for the really great talk.
Yeah, thanks. Well, I can. Yeah, I mean, I wish I can go through all the questions. I can probably answer. You can join our Telegram or Discord, and I can kind of answer the rest there. And sorry for kind of. There's just so many questions, and I love to kind of be able to go through all those.
All right, cool. Thanks so much. On